Good evening, dear students. We welcome you for the session on business economics. And to take forward the session, we have a renowned faculty, CA Nagendra Bhaktha sir, with us. So before handing over the session, let me introduce sir to you. Today we have with us CA Nagendra Bhaktha sir, affectionately known as GST IC Park among his students, with unique talent for simplifying complex tax calculations and aiding exam preparation through innovative tax simplifying techniques and charts. Sir expertise across CA, CS, and CMA fields. Sir cleared his chartered accountancy in 2021. Sir believes that studies with fun are a great blend which makes the aspirants achieve their goals with full precision. Sir plays multiple roles very effectively as a guide, teacher, mentor, motivator, and a friend to his students. Sir chose to practice as a CA in Hebrew and also serves as a faculty member at Trisha classes. A very warm welcome to you, sir. Over to you.
Hello, everyone. Good evening. So I hope, how are you, my students? So many of you are my students here. And I welcome all the viewers to this session. A very good initiative from Trisha classes. Why? Because this time in economics, business economics, so the things have been added, some chapters have been added, and the majority of the portions which is added in economics. So economics as well as some other subjects such as accounts, law as well. In economics, what has happened, sir? Earlier, it was BCK and economics by all. By now, you already know about this. BCK and economics was there. In economics, there was somewhere five chapters were there. Five chapters were there. Right now, you have 10 chapters. Yes, you heard it right. 10 chapters, basically five chapters extra. So they have added extra five chapters to you. So that means it is a whole syllabus now. The whole syllabus which has 10 chapters. Guys, it is 10 chapters. So earlier 50 marks, 60 marks for economics, 50 marks for economics. Now, sorry, 60 marks for economics, 40 marks for BCK. But this time BCK is taken out. We have 100 marks for economics. So, how's the Josh? 100 marks, complete 100 marks for economics. Nice, no? So, basically, yeah, Dishaji, good evening. Welcome, welcome. How about you, sir? I'm good. I'm always good. Sanviji, hi, good evening. Welcome. Uh, so, how are you doing? I'm sure that you all are doing well. There is some uh, uh, changes which I already discussed. Five chapters which is added, no, which is all macroeconomics. So earlier we had majority of our portions in economics was microeconomics. Now it is macro. Macro is also added. I told you five chapters macroeconomics. So which are the chapters, sir? Just to give you one introduction. Chapter 6 is about, okay, I'll just show you uh, the index here. Yes, can you see that? So this chapters, no, which was there already, the nature and scope of business economics, which was there. And the second chapter, that is theory of demand and supply, that was also there. And theory of cost, theory of production and cost. Chapter 4 is meaning and types of markets, we knew. Business cycles, that was also there. These five chapters were there. Now you have determination of national income, chapter number 6. So basically Keynesian theory, we have Keynesian theory and we have the national income accounting. Okay. Next, public finance in public finance, we have fiscal functions, market failure, process of budget making, fiscal policies. So these chapters were there. I mean, chapters do we have now? Right now, we have these chapters, these units. In that chapter, money market. So how money is getting created and how it is changing the market. So that also we know. We have in our syllabus international trade. Next one, chapter 9 is about international trade. And lastly, chapter number 10, which is Indian economy. So all these 5 chapters, which is about macroeconomics. And don't worry, you don't have to remember some basic datas or the analytics. No, not required. It's not like your PUC where you have to remember some of the numbers. All these things were required. Only in 10th chapter, you need to go little general, and it is based on your kind of memory. So it is based on your memory. In all other chapters, no, in all other chapters, which is very, very, very interesting one. Believe me, people, it is interesting one. Okay. Those who are studying all these concepts for the first time, not to worry, घबराने की कोई जरूरत नहीं. Don't worry, we are going to discuss all these things in detail, especially exam oriented. Okay. Don't worry at all. When I'm here, no fear. Okay. Here, the determination of national income. Directly, we go to chapter 6, determination of national income. Many of you in your PUC, those who have taken economics, you had this already, but still some depth, in-depth understanding is required. For that purpose, I'm going to that chapter and some very important topics in that chapter that we'll be discussing. Okay. Abhay, hi. Good evening. Welcome. Ashika ji, good evening. Welcome. Prajna, hi. Good evening. Welcome, welcome everyone. People, my students, love you one. If you are not my students, then also fine. I love you. Here, chapter 6. Wait. Chapter 6. Where is chapter 6, sir? Here. Chapter 6, we are discussing about national income. Sir, determination of national income. Why, sir? Why this national income determination is required? If you ask me the question, don't worry. To your question, ICAI has given the answer. So if you are economic students, you need to know something about national income. Why? Why national income accounting? Why we need to start calculating the national income? The macroeconomics level, government is going to calculate the national income. Why, sir, this is required? Why this is required? Don't worry, we are discussing here. See, the first unit of the chapter number 6, chapter 6, first unit is about national income accounting. Unit number 1, national income accounting of chapter number 6, determination of national income. So, national income accounting. So some basics, something about the theory here. National income accounting pioneered by Nobel Prize winning economist Simon Kuznets and Richard Stone. So they have given importance for accounting of the national income. Why? Wait, we will discuss. So is the system of macroeconomic accounts from the stage of production of the goods and services to the stage of their final disposal. So we will be discussing about from beginning, that is from the production till the final consumption. It may be for goods or services, from production till the final consumption. So how to account the income? How to account the income? Basically, you tell me, in my case or in your case, microeconomics mein how to calculate the income. If you ask me how to calculate the income, sir, we will add all our credits to our bank account. All the credits in my bank account, that is my income. Credit, you know what is the credit? What is the meaning of credit? Okay. All the credits which I get to my bank account, no, if I go on adding, that is my income. But to national income, sir, what is the capacity of one nation? What is the capacity of nation in generating the income, sir? What is the capacity of the nation in generating the income? To know that or to calculate that, some other method is required. There is no bank account for government. No, the government might have some bank account. Government will have some bank account, but still, so there should be a method to calculate the national income. There are n number of ways to calculate the national income. Some of the economists, they say that you go for gross domestic product. Some of them say that you go for net domestic product. Gross domestic product under market price, gross domestic product under factor price, net domestic product under market price, net domestic product under factor price. So there are many methods. Believe me, there are many methods to calculate here. But these economists say that what is the method? What is the ideal method to calculate the national income? So there is many ambiguities, or there is confusion, dilemmas how to calculate this. So it depends upon the economist and what is their view or what is their approach about the calculation of national income. Here, national accounts, I told you, they are going to give you some conclusion. Why do we need to calculate the national accounts? National account help us to understand how various transactions from the stage of production of the goods and services to stage of their final disposal are interrelated and give us an idea of the working of an economy. So it will give us one idea of the working of the economy. I told you in an individual person's case. Now, if there is one individual person, this person, what is his income? If you see his bank account, you will get to know what is his income. But when it comes to a country, a nation, how to calculate the national income, sir? Very difficult to calculate the national income. So we go for some of the methods I told you. GDP, gross domestic product, the income of a country can be calculated. Income of a country can be calculated by what is its capacity of production. What is the capacity of a country to produce some goods? Okay, if they are producing, for example, just for example, say, if they produce 100,000 quintals of rice, think, if they produce 1,000 quintals of rice, if they produce 1,000 quintals of rice, then in that 1,000 quintals, per quintal, think that per quintal it is 2,000 rupees. Per quintal of rice, it is 2,000 rupees. 2,000 multiplied by 1,000. 2,000 multiplied by 1,000. So obviously, the income of the nation will be 20 lakhs. 2,000 multiplied by 1,000, the income of the nation will be 20 lakhs. Why it is 20 lakhs, sir? Because that is the capacity of the country. I can say that this is national income. Correct? No? In my bank account, it is based on my income, my capacity ke hisab se I go on getting the income. Same way, a nation, how do we calculate, sir? Basically, to a nation, we calculate it on the basis of the capacity of the nation to produce some goods. The total production that it has done multiplied by market price of that goods. There are many methods. But right now, you just think that India is producing 20,000 quintals of rice multiplied by market price per quintal. If I multiply that, I will get the national income. So not just rice, I have to include all the productions, all kind of products which is produced in India. I will include all its monetary values. So this is nothing but national income. Okay, this is nothing but national income. Yes. So it helps to meet the needs of the government, private analysts, policy makers, and decision makers. It is going to help many people. It is going to help many economists. Why, or not just economists, it is policy makers, decision makers, to know what is the capacity of the country. See, for example, in a country, the policy makers, example, the tax, CBDT, they have to make one decision about putting one tax. That tax, it might be direct tax, or it can be on GST. It can be GST, or it can be direct tax. Sir, how they gauge or how they measure? We have to put so much of tax on the people, on the citizens of the country. How do they measure it? They measure it on the basis of the capacity, earning capacity of the country. If the earning capacity of the country is very high, then the tax rate might be little high. If the earning capacity of the country is less, then the tax rate might also be little less. So these are the users. So the decision makers, policy makers, government, any authority, they will use this data to analyze or to make some decisions. Okay? Yes, sir. The Central Statistical Organization, CSO, in the Ministry of Statistics and Program Implementation is responsible for compilation of the national account statistics. So they are responsible for compiling. What is compiling? It is accumulating or compile. They go on the combine. So the data which is given by various sources and they will give it to the policy makers or decision makers. Yes. At the state level, the State Directorate of Economics and Statistics have the responsibility of compiling their state domestic product and other aggregates. Central level में CSO, Central Statistical Organization, they will compile from various states. In the state level, it is the Directorate of Economics and Statistics at the state level and at the central level. Yes. Okay, so this is some preliminary about national income accounting. This is some preliminary about national income accounting. Now, we need to know what are the usefulness and significance of the national income estimate, sir. What is the use of this national income estimate? Why we need this national income? Estimation of national income, why it is required? What is the use, sir? National income accounts are fundamental aggregate statistics in macroeconomic analysis. It is very much fundamental aggregates or some important statistics which is required for macroeconomic analysis. What is macroeconomic analysis, sir? If you ask me, sir, what is macroeconomic analysis? It is nothing but analyzing the country's economic condition. Can be employment, it can be inflation rate, it can be any other statistics. Getting this? So for analyzing what is the condition of the macroeconomics or what is the condition of a nation compared to other nations. You can use it for comparison as well and are extremely useful, especially for emerging and transition economies. Now you get one doubt. So what is this? I know emerging countries such as developing countries. So developing countries like India. So that is emerging economics. What is this transitional economies? So what is the meaning of transitional economies? Very simple, which are going from underdeveloped country to developing country or from developing country to developed country. That is transitional economy. So very much helpful for the emerging economies and transitional economies. Okay. Sir, now here, what are the important usefulness? It helps the business to forecast the future demand for their products. So any products which are produced here, it will help the government or economy to forecast what will be the future demand. Now you remember chapter number 2, demand. Chapter number 2, that is the theory of demand, we discussed that if income increases, demand also increases. Yes or no? Yes or no? A CPT is CPT. Remember a CPT is CPT? Okay, in that a CPT is I. I stands for income. I stands for income. If there is increase in income, there is increase in demand. If there is increase in income, there is increase in demand. So this is a CPT is CPT में I. Same way, if national income is increasing, then definitely the income of the people is increasing. If the income of the people increases, then the demand, national demand also increases. Number 1, it helps the business to forecast the future demand of their products. Second one, the estimate of national income show the composition and structure of the national income in terms of different sectors of the economy and their variations. We will see, we know that there are 3 basic sectors. Which are the 3 sectors? Primary, secondary, tertiary. Primary is agriculture, secondary is industry, tertiary is service. These are the 3 sectors. Now, by calculating the income of all the sectors,
By calculating the income of all these sectors, I can know, I will get to know which sector is actually leading sector. What will I get to know, sir? Which sector is leading sector? So that if a sector, example, primary sector is not leading, tertiary sector is leading, that means they are generating more income. What government can do? They can take some money from tertiary sector and they can put it in primary sector. They can put that amount in primary sector. If the secondary sector is growing, obviously secondary sector uh, we cannot think that only tertiary sector is important, primary sector is important, or only secondary sector is important. So the balanced growth of all the sector is very important. So that government says that we can know which sector is growing here, which sector is growing. So we will get one estimate, fair estimate about which sector is growing, and based on that we can make some policy decisions. Yes. Now, point number 3 says that sectoral contribution to the national income. Which sector is contributing more to the national income? Just now discussed about that. Yes. Which sector is contributing more to the national income? So that information used by the government to measure the sectoral growth. Just to see which sector may there is huge growth and which sector may there is little less growth. Yes, correct. So this is one more use, point number 3. Next one, point number 4. National income statistics also provide a quantitative basis for macroeconomic modeling and analysis. What is modeling, sir? What is macroeconomic modeling? Macroeconomic modeling is nothing but in future, for next 2-3 years, what should be my economy? How should economy grow? And where we have to go give more importance? We are creating one model for our economy. Basically, all these data will be done by all these uh, activities are done by the policymakers. We usually put it on policymakers. Policymakers will take this data and they will do the economic modeling. Same way, national income estimates throw light on income distribution. See, usually in primary sector, who will be there in primary sectors? Specifically, primary sector is agricultural sector. The farmers, I don't say all farmers are poor, but majority of farmers, they have some poor income. Or I mean to say their income is very less, so that they are little poor. Okay. If primary sector is growing, that means if primary sector is growing, that means they are making some improvements and their standard of living is improving. So that is seen here, that it's given again in the next point. Next point may, that is what we are going to discuss. If the national income is growing, primary sector is growing, that means the agriculture, that sector is growing, and the majority of agricultural workers in agricultural sector or farmers in agricultural sector, they are poor. If agricultural sector is growing, if their income is more, then obviously the poverty alleviation program is working. And international comparison in respect of the income and standard of living. So international sector may we can compare. So that means we can compare our country with another country and whose national income is more, so that we can compare here. Combined with financial and monetary data, national income data provides a guide to the policies for growth and inflation. So just by looking at the income, see, remember, very important one, if income increases, listen, if income increases, then what happens? Demand also increases. If demand increases, guys, if demand increases, then there is inflation. So if income is growing at the rapid rate, then we can think that there will be inflation. Immediately, government will take some action. Precautionary actions. So what are these precautionary actions? We will discuss in coming chapters. Interesting chapters thanks to ICAI, Institute of Chartered Accountants of India, because these chapters are compared to BCK. Obviously, these chapters are interesting one compared to BCK. In my case, I'm not telling in your case. I don't know how you were studying BCK, or if you are enjoying BCK, I'm so sorry. But I'm sure that more than BCK, you will enjoy economics. Economics ka these chapters, no, very interesting one, thanks to ICAI. So these are the usefulness. These are the usefulness of the national income accounting. Later, after this, we will discuss about what are the different concepts that we have to study in national income. Concepts that we are studying in national income, such as GDP at market price, GDP at factor cost, NDP at market price, NDP at factor cost, like this. We have to calculate many concepts here. Believe me, very interesting one. Okay, very interesting one. Abhai. So though from a non-economic background, I managed to get 71 in foundation in economics. Helped a lot for aggregate, sir. Love you. Love you too, Abhay. That was a good comment. And you are attending this class? Kyun? Knowledge sake. Very good. Huh. For the sake of knowledge, he is attending this class. You managed to get 71. That's a good, it's a very great, yeah. And you are non-economic background. Economics. You attended the crash course thanks to Trisha classes. Okay. Different concepts of national income. There are many concepts here. There are different concepts which are there in national income. Chalo, we'll discuss about that. We begin our discussion with the basic measure of output, which is gross domestic product or GDP. First, we are going to start our not conversation. We are going to start our discussion in national income with the help of GDP, gross domestic product. So the production side of the economics transforms input such as labor and capital into output. Correct? Now, what is production? You are putting some inputs, raw materials, and you are converting this into output. This is called as production. Where we studied, sir, chapter number 3. Remember what is production in chapter number 3? Production is nothing but adding utility or creating utility to an existing product with some process. That is production. Economic sense mein, that is production. In common parlance, what is production? You will put some input and you'll get some output. Input and you will take some output. This is called as production. That is production. GDP. The factor payments. Inputs such as labor and capital are called as factors of production. We have 4 factors of production: land, labor, capital, organization. Correct? Remember, production chapter mein we discussed about land, labor, capital, organization. These are the 4 types of or 4 factors of production that we have. And the payments made to the factors such as wages, interest payments are called factor payments. Agree? So wages which we pay to the labor, that is factor payment. What is factor payment? Payments which is done to the factor called as factor payment. Correct? We have production, and what is factor payment? Factor payment is those things or the payment which is done to the factor is called as factor payment. Next one, gross domestic product. Sir, what is gross domestic product? What is gross domestic product? The first point we are going to discuss, the first concept is GDP, gross domestic product, and in that nominal GDP or gross domestic product at market price. Sir, what is this nominal GDP or gross domestic product at market price? In simple words, I am going to tell you in simple words, all the products which are produced in India, types of products. Example, mobile phones. How many mobile phones? I'll give you one hypothetical example. I'll give you one hypothetical example. In India, we produced 100 mobile phones. Hypothetical example, guys. I'm so sorry. 100 mobile phones. 100 mobile phones. Per mobile phone, it is 10,000. So totally 100 into 10,000. Kitna hoga? 100, 10,000. Okay. Wait. First, I'll put the commas later. 100 10,000. Correct? No, so many. So totally 10 lakhs. The value is 10 lakhs. In India, 1,000 meters of cloth, 1,000 meters of cloth per meter. Per meter, it is 2,000 rupees. Example, per meter cloth and 1,000 meters of cloth, 1,000 meters per unit. I'll write it as per unit. Per unit 2,000. 2,000 into 1,000. 2,000. 20 lakhs hua. And we produce some machinery, 200 machinery, 200 machines we produce. Per machine, it is 10,000. It is 210,000. Again, 20 lakhs. Think that all these are our production. I'll confine our discussion to some hypothetical example. So I'll confine this. Think that we in India, we produced only this much of production in 2020, 2021. These were our production. Then what is our GDP, sir? Gross domestic product is 10 lakh plus 20 lakhs plus 20 lakhs. Totally 50 lakhs is our GDP, gross domestic product. Sir, how to calculate GDP? Gross domestic product at market price is equal to current year production multiplied by current year price. Current year quantity. Okay. How to calculate, sir? Market price. What I have done, total quantity that we produced multiplied by the per unit, market price per unit. If I do this calculation, if this math is done, no, then we will get gross domestic product at market price. So how to, in simple words, how to calculate GDP at market price, sir? Current year quantity multiplied by current year market price. Right now, what is our quantity multiplied by right now? What is the price? If I multiply that, I will get gross domestic product at market price. I hope this is clear. Yes. This is clear, sir. Listen, gross domestic product is the value of all final goods and services produced in the country within a given period. So what is this, sir? It is the value. It is the value of all final goods and services produced in the country. Final goods and services, not intermediate goods. Hello. What is intermediate goods now? Sugar is final goods. Sugar cane is intermediate goods. Sugar is final goods. Sugar cane is intermediate goods. So that we have to calculate the final products, not intermediate. Intermediate product is different. Final product is different. जा रहा है दिमाग में? Yes. Okay. So within a given period, it includes the value of the goods produced, such as houses and mobiles, and the value of services such as telecom, health, insurance. The output of each of these is valued at the market price, and the value are added together to get the GDP at market price. Yes, no? That is what we have done here. That is what we have done in this example. What we have done? The total quantity that produced in the year in each product and services, and multiplied by the market price of each of these product, market price per unit of each product that we did multiply, and we got the value. That value we have added here. See, the total quantity that we produced per unit value, if I multiply, I got this answer. And addition, if I go on adding all these values, this is GDP at market price. Hi. Yes. So this is nominal GDP. So this we discussed just now is nominal GDP. Sir, then what is real GDP, sir? So nominal GDP, we understood nominal GDP. Now the question is, sir, what is this nominal GDP and real GDP? क्या है sir funda? So what is this nominal GDP and real GDP? Okay, I'll tell you. Nominal GDP and real GDP का issue here. Listen. Nominal GDP and real GDP. First, let me explain you with one example. Just concentrate on this example. In 2020, the total quantity that India produced, the country, our country quantity that we produced is 20,000. 20,000 and price is rupees, example 10. We produce 20,000 units of some product X. So product X it is, some product. Just one example, hypothetical example, just to understand what is the real GDP and nominal GDP, that's all. Okay. Price per unit is 10 rupees. Now, what is the nominal GDP? Nominal GDP in that year, nominal GDP is 20,000 multiplied by 10. GDP at market price. Basically, what is GDP at market price is dash. GDP at market price is, so it is 2 lakhs. GDP at market price will be 2 lakhs. Anna, agree? Sir, GDP at market price will be 2 lakhs here. In 2021, we did produce same 20,000 units of product X. We did produce 20,000 units of product X and the price is 20. Price is 20. Kitna hoga, sir? 4 lakhs. GDP is 4 lakhs. Now the GDP got increased to 4 lakhs. Now you tell me guys, 2 lakhs to 4 lakhs. GDP increased from 2 lakhs to 4 lakhs. Am I happy with 4 lakhs? No. Why? Because the real capacity of the country has not increased. See, real GDP has not increased. 20,000 units were there. Now it is 20,000 units. It looks like it has increased, but actually not. The value increased from 2 lakhs to 4 lakhs. So why this value increased? Because of inflation. So this is because of inflation. This value increased because of inflation. So inflation is good, sir. To some extent, yes. Inflation is good, but only inflation, only because of increase in the price, I don't like that. So there is no point in increase in the GDP only because of inflation. Strictly speaking, there is no increase in the real GDP. Nominal GDP has increased. This is called as real GDP. Real GDP did not increase at all. Real GDP did not increase at all. Again, I'll give you one more example. See, in 2020, your income in 2020, your income was, example, 100. Your income is 100. And per example, per chocolate, the price is rupees 20. 20 per chocolate. How many chocolates you could have purchased? How many chocolates you can purchase? Your purchasing quantity is 5. You can purchase 5 quantity. Ha, Deepak ji, you are right. You can purchase 5 quantity here. 2021. Now we will go to 2021. Think that your income is same, Baba. Your income is same. And the price per unit is, example, 25. Price per chocolate is 25. 25, that means how many chocolates you can purchase now? Only 4 quantity. Yes, no? Here you can purchase only 4 quantity. You cannot purchase 5 quantity. You are understanding. I think that, I believe that you are getting my point here. See, income did not increase. Baba, income did not increase. But your real income has decreased. How, sir? How your real income has decreased for quantity. This is for quantity. What if I multiply this with 20? So for purchasing same 4 quantity in 2020, you had to spend only 80 rupees. 20 multiplied by 4 quantity. In 2020, to purchase same 4 quantity, no, in 2020, to purchase same 4 quantity, you should have spent only 80 rupees. That means you were rich in 2020. Right now, even if you have 100 rupees, you cannot have same satisfaction. The level of your satisfaction has decreased. Even if your income is 100. Income did not change, sir. Income is 100. Even today it is 100. Earlier it was 100. Even today it is 100. But if you calculate real satisfaction or real GDP or your real income is only 80. I'll give you one more example. I'll give you one more example. Your income in 2011, 2011 में your income was 20,000. Your income was 20,000. And you could have purchased, example, you could have purchased rice. Per kilo, it was 100 rupees. Think, per kilo, it is 100 rupees. Rice. And how many quantities? How much the quantity of rice you can purchase? Rice rupees per kg of rice. It is 100. How much you can purchase? 200 kg. Earlier you could purchase 200 kg. Correct. Earlier you could purchase 200 kg. In 2022, your income is, for example, your income is 40,000. Your income is 40,000. Your income is 40,000. And rice per kilo, it increased to 250. Per kilo, rice has increased to 250. Now tell me, how many kgs you can purchase? 40,000 divided by 250. Answer is you can purchase only 160 kg. You can purchase only 160 kg. With the same, see 40,000, sir. Sir, my income is 40,000. But see, you can purchase only 160 kg. Correct. You can purchase only 160 kg. In 2011, to purchase same 160 kg, how much income was required? How much income was required? 160 multiplied by 100. 160 multiplied by 100. That means you could have purchased same 160 kg with just 16,000 rupees. 16,000 rupees. Correct, no? 16,000 rupees के हिसाब से. So that with the 16,000 rupees, you could have purchased 160 kg. So that means your real income is just 16,000. Looks like your income is 40,000. No, your income is not 40,000. Actually, strictly speaking, if you take 2011 as your base year, if you take 2011 as the base year, then your income is 160 multiplied by 100. Answer is 16,000. Your really your income is 16,000, not 40,000. So how to calculate real GDP, sir? Real GDP. How to calculate? What is this? 16,000. How did we calculate real GDP? We did calculate by current year quantity multiplied by base year price. What is base year, sir? Base year is nothing but the year with which we are comparing. We will take that year where the inflation was not too high, not too low. The variations was very less. So that year we will take it as the base year. So we are taking that year as the base year here. So how to calculate real GDP? Current year quantity multiplied by base year price. Current year quantity multiplied by base year price, Baba. So this is nothing but. I am very sorry. I'm very sorry. Very sorry. So current year quantity with base year price. Okay, एक second. Yes. When it is connected to same Wi-Fi, no, this happens. Huh. One of my renowned client. Real GDP. Real GDP is equal to current year quantity multiplied by base year price. Sir, how to calculate, sir? It's very simple. Current year quantity multiplied by base year price. So this is how you calculate the real GDP. This is how we calculate real GDP. Okay? Yes. So what is given in the book? Listen. Real GDP, nominal GDP increases over time for two reasons. By now, you know, nominal GDP increases because of two reasons. What are the two reasons, sir? What are the two reasons? Reason number one. So far, we discussed the same because of inflation. Because of inflation. Real GDP increases because of inflation. Sorry, nominal GDP increases because of inflation. Example, the in 2020, the quantity which produced is 10,000. 10,000 quantity is produced and rupees 10 per unit. 10 per unit. What is nominal GDP? Nominal GDP. Nominal GDP will be 1 lakh. Correct? No, it is 1 lakh. In 2021, quantity we produced is same. But there is increase in the price. This is inflation, purely inflation. So that it is 1,10,000. So it increased to 1,20,000. 1,10,000. There is increase in nominal GDP because of inflation. Why? Because actually quantity did not increase. Quantity increase nahi hua hai, sir. Even then there is increase in the gross domestic product. Nominal GDP has increased. Now this is first reason. Reason number two. Second one is because of increase in quantity. Quantity increase, sir, not because of inflation. Example 2020 May, the quantity which is produced is 10,000 quantity. Per unit, it is 10 per unit. So what will be the answer, sir? 1 lakh. 1 lakh. But in 2021, they produced 11,000 units. 11,000 quantity. Rupees same. 10 per unit. That will remain to be same, 10 per unit. So here it is 1,10,000. See, here also there is increase in the GDP. Here also there is increase in the GDP. This increase, 10,000 increase is because of inflation. This 10,000 increase is because of quantity. Sir, in which I am more interested? As a nation, nation is interested more in second one, not in first one. Inflation तो ऐसा ही होता ही रहेगा. But what is required? What I want increase in the quantity. Earning capacity of the country. Earning capacity of the country has to increase. Not inflation. Inflation तो होता ही रहेगा यार. So inflation will happen every year. I don't want that inflation. I want the effect of increase in the earning capacities. That's why we are calculating what is actual GDP, real GDP, not because of inflation. I want to eliminate inflation ka effect. I want to eliminate inflation effect. I want to see what is the actual increase in the earning capacity. Yes, sir. Listen here. The production of most of the goods increases over time. Production of the goods increases. This is good sign. Very good. If there is increase in production, I am interested in that. The price of most of the goods also increases over time. No, I am not interested in this. Why? Because so it is quite common that increase in price happens every year. But what I want is increase in the production capacity. If the goal is to measure the production and its change over time, first point, over time, It is required to eliminate the effect of increasing price on the measure of GDP. I want to see that what is the increase in the effect of price. So that is what required. I have to eliminate that increase in the price. Eliminate inflation. I want to eliminate the inflation. Next one, GDP deflator. It is GDP deflator. GDP deflator. Okay, deflator. The calculation of real GDP gives us a useful measure of inflation known as GDP deflator. The GDP deflator is the ratio of nominal GDP in a given year to real GDP of that year. How to calculate GDP deflator, sir? Listen, how to calculate GDP deflator? First, you have to calculate, see that what is nominal GDP. Nominal GDP divided by real GDP. You will get a point. You will get some, it's nothing but you will get one percentage. You will get a percentage. So that is nothing but deflator. GDP deflator. Usually, obviously, nominal GDP is greater or real GDP is greater. Many a time, nominal GDP is greater than real GDP. So obviously, you have to get more than one as the answer. You will get more than one as the answer. So in our example here, what is nominal GDP for 2020, 2022? What is the nominal? No, not here. Wait, here. What is nominal GDP for 2021? 4 lakhs, correct? No. Nominal GDP for 2021 is 4 lakhs. What is the real GDP for 2021? How to calculate real GDP? Real GDP. GDP is equal to quantity, current year quantity multiplied by base year price. Yes or no? So what is current year quantity, sir? 20,000. 20,000 multiplied by, I am comparing this with 2020, no? Base year price. What is base year price? 10. So what is real GDP? It will remain to be 2 lakhs. Real GDP will remain to be 2 lakhs. Why it will remain to be 2 lakhs, sir? Because there is no change in quantity. Quantity did not change. That's why there is no change in real GDP. What if here quantity, no? I will change the quantity and price also. Quantity is 25,000 and price is rupees 20. 25,000 into 20, answer is 5 lakhs. 5 lakhs here. So what is this 5 lakhs, sir? This is nominal GDP. This is nominal GDP, no? Right now, what is GDP? That is 5 lakhs. 5 lakhs is nominal GDP, sir. This 5 lakh is nominal GDP. Okay. What is current year quantity? 25,000. है ना? Current year quantity is 25,000. Okay, sir. 25,000 quantity multiplied by what is base year price? 10. Base year price is 10. 25,000 multiplied by 10, answer is 2,50,000. This is real GDP. This is real GDP. Now, do I have nominal GDP, sir? Hana? Yes, no. So I have nominal GDP. Do I have real GDP, sir? Yes, I have real GDP. How to calculate deflator, sir? Very easy, Baba. So you have to calculate deflator with the help of the formula. What is the formula? We will analyze the formula later. We will analyze the formula later. The formula is deflator is equal to nominal GDP divided by real GDP. What is nominal GDP? Nominal GDP is 5 lakhs. 5 lakhs divided by real GDP is 2,50,000. So obviously you will get 5 lakhs divided by 2,50,000. Answer 2. 2 times into 100. If you do this, it is 200%. So you will get 2. That is nothing but you will get 200%. So you'll get 200% as the answer. What is the meaning of this 200? Let's analyze what is this GDP deflator. What is the meaning of this 200%, sir? That means nominal GDP is 200% more than real GDP. There is inflation of 200% of real GDP. So you calculate 2,50,000 multiplied by 200%. Answer is 5 lakhs, no? 5 lakhs हुआ ना? So what is the meaning of this? 200% of real GDP is your nominal GDP. Yes. Now, if I give you one question, can you answer the question? Okay. My question is, I'll give you one question. My question is, nominal GDP, no? Nominal GDP is equal to 7 lakhs. Nominal GDP is 7 lakhs. 7 lakh crores, example. Nominal GDP is 7 lakhs and GDP deflator. GDP deflator. GDP deflator is 150. GDP deflator is 150. Can you calculate? Can you calculate? What you have to calculate now? Real GDP. You have to calculate real GDP. Fast, fast. I need the answer. Nominal GDP is 7 lakhs and GDP deflator is 150. You have to calculate. GDP deflator is 150. You have to calculate real GDP. How to calculate, sir? Fast, fast. There is some streaming difference here. You have to calculate and you have to tell me. Answer? Okay, some gave me the answer. Okay. So I got answer from Deepak. Correct answer, dear. Correct answer. So answer is 4,66,666.666666. So the answer is 4,66,666.6666. Okay. Sir, how to calculate this? How to calculate this? Very simple one. I told you nominal GDP is 150% of real GDP. So that means real GDP multiplied by 150% is equal to nominal GDP hoga na? So what is nominal GDP? What answer you have to get? 7 lakhs into 150% or X, example X. X is real GDP. X into 150%, you have to get nominal GDP. So what you can do now, X is equal to 7 lakhs divided by 150%. What is 150%? 150 divided by 100. If you bring it this side, 100 divided by, what you can do is 7 lakhs multiplied by 7 lakhs multiplied by 100 by 150. Answer 7 lakhs into 100 divided by 150. Answer is 4,66,666.66. So if you want, you can check this. 4,66,666.66 multiplied by 150%. You will get 6,99,999.999999. है ना? So you can do that, or you can directly do 4,66,666.666666 multiplied plus, not multiplied by, I'm so sorry, plus 50% in your calculator. You can directly get 7 lakhs as the answer. This is the importance of GDP deflator. So I told you 150. What is this 150? So real nominal GDP is 150% of real GDP. That is the importance of GDP deflator. This is the importance of GDP deflator here. If you have some doubts, please do ask. Please do ask the doubts. So based on this, there is one question here. Don't worry, there is one question. How to calculate GDP deflator, sir? Nominal GDP, we discussed about this. Nominal GDP divided by real GDP into 100. So this is GDP deflator. You can see one illustration here. Illustration. The nominal and real GDP respectively of country in a particular year is 3,000 crores and 4,700 crores. Respectively, calculate GDP deflator. How to calculate, sir? Very easy one. Nominal divided by real GDP. What is nominal GDP? Nominal and real GDP respectively is 3,000 and 4,700. So answer is 3,000 divided by 4,700. What is the answer? 3,000 divided by 4,700 into 100. Answer 63.82. 63.82. Can you tell me what has happened here? Can you tell me what has happened here? What is the 63.82? What is the meaning of 63.82? 63.82, the meaning is nothing but nominal GDP is 63.82% of real GDP. क्या हुआ है? Inflation और deflation? हाँ, inflation हुआ है और deflation हुआ है. So the answer is deflation. There is deflation. Can you tell me the percentage of deflation? How much deflation has happened? 36.17% of deflation. 36.17% of deflation. So how to calculate, sir? 4,700 minus 36.17%. You will get 3,000 as the answer. Very good, Deepak ji, you are right. 63.82. Once again, everyone, listen. Sir, what you are telling, sir? I'm not getting anything. Listen, I'll tell you again. This is for you guys. Those who have not understood, no, to you, this is the, I am solving this once again. So they gave that. What is given, sir? What is given? Nominal GDP. Nominal GDP is 3,000 crores. In crores, nominal GDP is 3,000 crores. And real GDP is 4,700 crores. Now they are asking me to calculate GDP deflator. GDP deflator. How to calculate, sir? Nominal GDP divided by real GDP into 100. So what is nominal GDP? 3,000. Real GDP is 4,700. Into 100, I will get the answer. 3,000 divided by 4,700 into 100, answer is 63.83. What is the meaning of the 63.83%? The meaning is, meaning is nominal GDP is 63.83% of real GDP. Real GDP. That means something has happened here, sir. What has happened? There is deflation. Note. There has been a deflation. In the current year. To the extent of 30 36.17%. In bracket may write 100 minus 63.83. So you will get 36.17%. So this is the deflation which has happened. Sir, I want to check this, sir. How to check this? Very easy one. You can cross verify. So what is real GDP? Real GDP is equal to 4,700. 4,700 crores. Do one thing. Multiplied by 63.83%. So you will get 3,000 somewhere. 4,700 multiplied by 63.83%. You will get 3,000.01. So I say that approximately 3,000. It is 3,000. Sir, another way, real GDP is equal to, sorry, what we are calculating, nominal GDP, no? Nominal GDP is equal to, here also, nominal GDP is equal to real GDP minus 36.17%. Sir, why you are deducting? Because there is deflation. So there is deflation. So if you do this in your calculator, 4,700, press minus button and 36.17%. So percentage button you have to press. So you will get 3,000.01. Nothing but approximately 3,000. You will get approximately 3,000. Are hayana. Easy or not? Earlier we have added. Why? Because there was inflation. So what is the conclusion, sir? If the answer is more than 100, it is inflation. If the answer is less than 100, then there is deflation. Okay, sir. Conclusion. If GDP deflator is more than 100, if GDP deflator is more than 100, then inflation. There is inflation. Point number 2. If GDP deflator is less than 100, then deflation. Ashte. Very simple one. Simple or not? Hai ki nahi? Simple or not? Yes, Baba. Ashte. So that is GDP deflator. Now if I continue, you have to find the nominal GDP if real GDP is 450 and price index is 120. There is twist here. So what is the twist? You have to find out. What is the twist? So if find nominal GDP if real GDP is 450 and price index is 120. What is the meaning of price index 120? Nominal GDP if real GDP is 450 and price index is 120. So what is the twist? Very simple twist. What is this 120, sir? So price index has become 120. Earlier it was 100. Now it got increased to 120. What is the meaning? 20% there is increase in the price. That is 20% inflation has happened. So what is this? What they have given? Find the nominal GDP if real GDP is 450. Real GDP is 450. 20% increase in 20% increase in the 20% increase in the nominal GDP. From real GDP, 20%. Very simple. 450 plus 20%. Answer. Finish. 450. What is that? Real GDP. Plus 20%. Plus 20%. Answer is 540. Sir, can you repeat, sir? Baba. I'll repeat. Listen. What is this price index? Sir, what is given as price index? Nothing but indirectly they are telling you earlier it was 100. Now it is 120. Indirectly they are telling that Earlier it was 100, now it is 120. So if there is increase by 20 rupees, nothing but there is 20% inflation. There is 20% inflation. 450 plus 20%, you are getting 540 as the answer. 450 plus 20%, you are getting 540 as the answer. Very nice. Sanviji, you are right. Raghuji, you are right. 540. Very good. Very good. You are getting right answers. Simple Agni, Deepak, super. You are getting right answers here. Huh. So that's one more question. Illustration number 3. Illustration number 3. Suppose nominal GNP, gross national product, that's okay. Gross national product of a country in 2010 is 600 crores and price index is given as base year to 2010 is 100. Now, let the nominal GDP is 1200 crores in 2018. Price index is 110. Find out the real GDP. You have to find out the real GDP. You have to find out the real GDP, for which you have to calculate what? How to calculate real GDP? Real GDP, current year. What you have to calculate? Current year quantity multiplied by base year price. How to calculate real GDP? There are many ways to calculate real GDP. Real GDP is equal to current year quantity multiplied by base year price. Baba, current year quantity multiplied by base year price. Yes, sir. Now, what is current? How to calculate current year quantity? Current year price you have. You have current year price. You have current year nominal income, nominal GDP you have. Gross domestic product. Correct. No, nominal GDP increases 2,200. You have current year nominal GDP, current year price. Current year nominal GDP divided by nominal GDP of the current year divided by price of the current year. If you do that, what you will get? 1,200 divided by 110. 10.90. What is this 10.90? Quantity. Current year quantity you will get now. Nominal GDP divided by current year price. If you do that, you will get current year quantity. Current year quantity multiplied by base year price. What is base year price? 100. Multiplied by 100 crore, you will get 1090.90. I have given the answer here. 1090.90. Sir, understood nothing, sir. Nahi, no worries. When I am here, no fear. I'll tell you. Okay, 600, 100, 1,200, 110. Listen. So what are the things given, sir? Given base year price is given. Base year price is equal to rupees 100. Base year price is rupees 100. Yes, sir. They give base year nominal GDP. Nominal GDP it is, not GNP. GDP rupees 600 crores. And they gave current year price. दिया है कि नहीं? हाँ sir, दिया है. Rupees 110. And they gave current year nominal GDP. That is equal to rupees 1,200 crores. 1,200 crores. Sir, इतना सब कुछ दिया है sir. Yes. And what they are asking, find real GDP. They are asking you to find real GDP. How to calculate real GDP? Real GDP is equal to current year quantity multiplied by base year price. Did we discuss about this already, sir? हाँ. You remember chocolate ka example, rice ka example, soap ka example? Yes. So current year quantity. Now first I require current year quantity. Current year quantity. How to calculate current year quantity, sir? Very easy. We know how to calculate nominal GDP. Nominal GDP is equal to current year quantity multiplied by current year price. Yes, no? Current year GDP. Nominal GDP is equal to current year quantity multiplied by current year price. Ha, sir. Do I know nominal GDP here? Yes, nominal GDP is 1200 crores. Okay. 1200 is equal to current. Do I know current year quantity? No, sir. I will write it as CYQTY, current year quantity. Do I know current year price, sir? Yes, sir. What is current year price? Rupees 110, sir. Multiplied by rupees 110. So how to calculate current year quantity now? 1200 divided by rupees 110. Rupees 1200 crores divided by rupees 110. That is equal to current year quantity. So what is current year quantity? Current year quantity is equal to 10.90 crores. That is 10.90 crores. Finally, sir, I received 10.90. That is current year quantity, sir. Now it is easy, no? Current year quantity multiplied by base year price. I have 10.90 as current year quantity crore multiplied by what is base year price? Base year price is given, sir, rupees 100. So if I multiply this with rupees 100, I will get 1090.90 crores. This is the answer. Simple hai ki nahi? Ayana? Yes, sir. This is simple, sir. I don't know why they have kept all these in your syllabus. Kyun, sir? Why this in your syllabus? CA students are genius students, no? Why they have kept this in your syllabus? I don't know. Huh. My students are always genius students. I know them. I know their capacity. One exam that cannot, calculate the capacity of my students. I have complete faith on my students. I have complete confidence on my students. They'll do it next time. That's okay. One attempt, I failed. Even I have failed. So see, failure is not the end. Don't worry. Failure is not the end. But if you stop there, that is the failure. So don't stop there. Alle nilli killa. Don't stop there. One failure will never determine or will never measure your capacity. Completely fine. If I failed once, completely fine. Don't worry at all. So don't stop there. If you stop there, no, if I would have stopped when I failed, then I definitely, it was very difficult for me to clear the CA finals. Don't break heart. So it is very much important that you will hold yourself up. Very important one. And I am sure that you will do it next time. Why? Because some interesting topics have been added here. I am very sure that you will do it next time. Okay. If you have failed once, that is completely fine. Okay. No worry. No worries at all. I have failed and I did not worry about that. First time when I failed, no, Gange, Godavari, Bhagirathi, Narmade, Sindhu, Kaveri, all this has come. That's okay. It is completely fine. No issues at all. Failure is the stepping stone to success, no? Huh. I'm very sure about my students. They will do it next time. Huh? I know their capacity. What ICI knows about your capacity. I know about your capacity. I have seen, you know. Huh. Okay. This is about one point here. So that was about gross domestic product. Yes, Raghuji. Failure is the stepping stone to success. I completely agree with this. Okay, those who have cleared everything in first attempt, guys, those who have cleared everything in first attempt, they don't know what is the pain of failure. And I failed once. I know the pain of failure. Now, if you have failed once, you know the pain of failure. Correct. No? Those who have cleared everything in first attempt, I am not demotivating you that you have to clear everything. But if there is something that you couldn't clear in first attempt, what is the issue? Nothing. You know the experience. So you know what is what it takes. and you have one extra experience compared to those who have cleared everything in first attempt. That's okay. It doesn't matter. Make sure that you don't stop here. Make sure that you don't stop here. I am unstoppable. So it's my favorite song. I'll repeat for you. This song is for you people. I'll put my armor on, I'll show you that I am. I put my armor on, I'll show you that I'm unstoppable. I'm a Porsche with no brakes. I'm invincible. Yeah, I win every single game. I'm so powerful. I don't need batteries to play. I'm so confident. Yeah, I'm unstoppable today. So better be unstoppable. So no one can stop you. If you are determined, then definitely no one can stop you. And my students, I am very pakka. I'm sure about them. Next time they definitely clear. Yes. Here. Net domestic product. As you know, the capital wears out or depreciates. Capital will wear out or it will get depreciated. While it is being used to produce output, the net domestic product is equal to the GDP minus depreciation. So this we already know whenever we are producing some products, no, we start using the machinery. We have to use some fixed asset. We have to start using the machineries. Correct now. So we use machineries and that will wear out. So that machinery will start depreciating. If we don't consider that depreciation, then do you think you will get the actual income? No, you will not get the actual income. To get that actual income, you have to deduct depreciation. What we will do now? Very simple. GDP minus depreciation, you will get net domestic product. Gross domestic product minus depreciation, you will get net domestic product. Aste, see, NDP thus comes closer to measuring the net amount of the goods and services produced in the country in a given period of time. So in a given period of time, you have to calculate gross domestic product and deduct depreciation, you will get net domestic product. So if someone asks you what is the difference between gross domestic product and net domestic product, you say them that it is depreciation. If you deduct depreciation, you will get net domestic product. Sir, net domestic product at market price. Net domestic product at market price. Gross domestic product at market price minus depreciation. It is net domestic product at market price. So what is the difference between G and N, sir? It is D, sir. Okay. So gross and net ka difference is D, domestic. No, not domestic. Depreciation. I'm so sorry. Depreciation is the difference between gross and net. Fine. Yes, sir. Note, gross is equal to net plus depreciation or net is equal to gross minus depreciation. Gross domestic product minus depreciation, you will get net domestic product. Net domestic product plus depreciation, you will get gross domestic product. Yes. So that is about gross domestic product and net domestic product. One more time, listen. Everyone here, 100% attention. Your 100% attention should be here. I want you. Now, here, listen. See, in case there is one country here. I don't know which country is this. Okay, this is one country. Looks like amoeba. I don't want to draw India because I'm very bad in drawing. I might include some other nations. If I am going to include Pakistan, then it is fine. So I can include Pakistan because I want. That is my undivided India. So it is actually, it belongs to me. India it is. So here, listen. This is one country, country X. Anything which is produced inside the country, no? Anything which is produced inside the country, that is domestic. Domestic. Example, a person in this country is producing inside. That is domestic. A person outside this country, he is producing inside this country. This is also domestic. So this is also domestic here. Why? Because I am not concentrating on person. I am concentrating on place. If it is produced inside the country, then to that country it is domestic. To that country it is domestic. Now tell me, this is one country. Okay, this is one country, and this guy who produced 2000 worth rupees goods in the country Y. This country is Y. He produced 2000 worth rupees goods in country Y. And there is a person inside the country who produced 4000 worth goods in country Y. There is a person inside the country who produced 6000 worth rupees goods outside country Y. And there is a person who is outside the country, he produced outside the country 8000 worth rupees goods. Now, can you tell me what is the total amount of, what is the total domestic product? And what is the total amount of domestic product? What is the formula here? Anything which is produced inside the country, to that country, it is domestic product. Correct? No? That means this is produced inside the country. This is produced inside the country. Gross domestic product is 2000 plus 4000, totally 6000. Gross domestic product will be 6000. Ashte. Gross domestic product will be 6000. This 6000 don't include because it is not produced inside the country. This 8000 is not gross domestic product because it is not produced inside the country. The value is only 6000, which is 2000 plus 4000. It is 6000. Yes, understood this? Yes. So this is gross domestic product. Sir, there is something called as gross national product. What is gross national product? I am concentrating on the till now in gross domestic product, I was concentrating on the place of production. And I was concentrating on place of production. Right now, I am concentrating on person who is producing. I am concentrating on person who is producing. Gross national product mein, I am concentrating on person who is producing. This is country Z. This is country Z. There is a person, Indian, Zedian. A person who is in country Z. Okay. Country Z mein, this is the person who is there in country Z. This person is producing outside this country. He is producing outside this country. Example, 4000 ka goods he is producing outside country Z. There is one more guy who is producing 2000 rupees ka goods inside country Z. There is one more guy who is outside country Z. He is producing 3000 worth goods inside country Z. And there is one more guy who is producing 2000 rupees goods outside country Z. He is not in the country. He is producing outside the country. Totally, you have to ignore this. There is no point. And I am concentrating on the person, so that I have to include 4000 and 2000. I have to include 4000 and 2000. So that means answer. Here also answer is 6000. Sir, why we will not calculate? Why we will not add 3000? Because it has to go outside. No. He will get the income. It is this person ka income, which is not, he is not a national. National means what? A person who belongs to the country. That person is national. So the person who belongs to the country, no, that person is national here. I hope you are getting this. So that these two persons are national. No, it doesn't matter where they are producing. It doesn't matter where they are producing. They are in this country, no. So they are the person who belongs to this country Z. That's why it is national. Okay, it is national. So now we will calculate, we will see what is given here. क्या दिया हुआ है sir? Gross national product. What is gross national product? Gross national product is a measure of the market value of the all final economic goods and services produced within the domestic territory of the country by normal residents during an accounting year, including net factor income from abroad. Anything a person who is in that country is producing inside the country, that you have to add, that you have to include, and you have to see include net factor income from abroad. Net factor income from abroad. Net, what is the meaning of net factor income? What we have to pay minus what we have to receive. If receipt is more, then we will add it. If payment is more, then we will deduct it. That is net factor income. I'll explain again. Listen. Here. There is one country. There is one country. Listen to me carefully. There is one country, and this Mr. A produces 2,000 worth rupees goods in the country, inside the country. He produced 2,000 worth goods inside the country. And there is Mr. B. He is producing 3,000 worth goods outside the country. And there is Mr. Q, who is producing 4,000 worth goods inside the country. He produced 4,000 worth goods inside the country. Okay. And okay, there is one more guy, Mr. Z, who is producing 5,000 worth goods inside the country. Inside the country. Okay. So these are 1, 2, 3, 4. 4 guys we are talking about. First, what we have to do? We have to include all those things which are produced inside the country by a person inside the country. So this Mr. Z and Mr. A, both are from inside the country, the same country, and they are producing in that same country. So what I have to do? 5,000 plus 2,000, totally 7,000. And this 7,000. And I have to calculate net factor income from abroad. What is factor income? By selling the factor, whatever income I'll get. What is factor? Factors of production. So if I give capital, if I give labor, if I give any other things, no, and I get some income, that is factor income. So factor income from abroad. I am giving my labor outside and I am getting amount. Correct? No, I am selling abroad and I am getting income from abroad. So what I will do now? See, this Mr. B, he produced goods outside. That means he has to get this 3,000 income, no? So this is the income of the country. 3,000 is the income of the country because 3,000 worth rupees goods is sold outside. That means Mr. B will get this income. So this will be the income of the country. Okay, for this 7,000, I will add 3,000. 3,000. But the one Q, Mr. Q, he has produced inside the country. That means from the country, this 4,000 has to go to that person. That means it is expenditure of the country. 4,000 has to go outside, no? Minus 4,000. So what we have to do? Net, this is net factor income from abroad. What country will receive and what country will pay? That we have to net it off. Correct? No? 3,000 minus 4,000. So that means outside, outgoing is more compared to incoming. So when you compare this with the income, outgoing is more. So that's why what we will do now? See, 7,000. What is this 7,000? Domestic income. Minus 3,000 plus 3,000 minus 4,000. plus 3000 minus 4000. This completely put together, we call this as net factor income. This is called as net factor income, gross domestic product plus NFIA, net factor income from abroad. We have to add net factor income from abroad. Sir, why we have to add, sir? We have to deduct for 1000, we have to deduct, no. We will put one bracket, finish. If we put one bracket, so we'll get the answer, no. See, 7000 plus, what is net factor income? Minus 1000, correct, no? Minus 1000, minus into plus minus hoga na. 7000 minus 1000, answer is 6000. 7000 minus 1000, answer will be 6000. Don't forget to put that bracket. What happens if you don't put this bracket? Bracket ಹಾಕ್ದಿದ್ರೆ ಏನಾಗುತ್ತೆ? If you don't put this bracket, क्या होगा sir? क्या होगा? कुछ नहीं होगा क्या? कुछ नहीं होगा? Minus into plus is minus. My plus into minus is minus. Plus होगा तो plus होगा. Nothing happens, huh? You know that I'm very good in maths. You know this, right? My students know that I'm very good in maths. You have to tell me, do I need to put the bracket or not? I believe that we have to put the bracket, otherwise sometimes it will give wrong answer. Better to put the bracket. I don't know. I don't think bracket will make any difference. Better to put the bracket. What nuksan kya hai? Okay, here. Gross national product is evaluated at market price, and therefore it is the fact. Gross national product at market price. So we will usually calculate gross national product at market price. Trisha knows that I'm good in maths. Huh? Here. How to calculate, sir? Gross national product at market price, which is gross domestic product at market price plus net factor income from abroad. NFIA. So gross domestic product at market price is equal to gross national product at market price minus net factor income from abroad. How, sir? Here. Calculation. Sir, gross domestic product. Gross national product at market price is equal to gross domestic product at market price plus net factor income. What if I put gross domestic product this side and gross national product this side? Now, gross national product minus net factor income from abroad. Sir, ಏನು ಗೊತ್ತಾಗ್ತಿಲ್ಲ sir. ಏನು ಗೊತ್ತಾಗ್ತಿಲ್ಲ sir. I'll tell you, listen here. Gross domestic product, no. Gross national product. We are discussing about national product now. Gross national product at market price is equal to gross domestic product at market price minus plus net factor income from abroad. So that was the thing. See, gross domestic product at market price. Gross domestic product at market price plus net factor income from abroad. That is gross national product at market price. Okay, sir. If I have to find out gross domestic product, GDP at market price is equal to GNP at market price minus net factor income from abroad. What I've done, sir, I took this side. GNP at MP minus net factor income from abroad. I will get one answer. That answer is nothing but net gross domestic product at market price. Gross domestic product at market price. Now, who will tell me the answer for net domestic product at market price? Gross domestic product minus depreciation. Can you tell me what is net national product at market price? How to calculate net national product at market price? Fast answer. Net national product at market price. How to calculate net national product at market price? So it is very good. Gross national product at market price minus depreciation. How to calculate net national product at market? We know that difference between G and N is depreciation, no? Gross national product at market price minus depreciation, we will get net national product at market price. Yes or no? Yes, sir. Okay, I'll give you one question. I'll give you one question, you have to answer. From gross domestic product at market price, gross domestic product at market price, how to bring from gross domestic product at market price, you have to bring it to net national product at market price. How to do this, sir? You have to bring gross domestic product at market, from gross domestic product at market price, you have to bring it to net national product at market price. How to do it? How to do it? Very easy one. Listen. First, you have to change D to N. Domestic to national. How to do that? Gross domestic product at market price is equal to, wait. I have to bring it to, first I have to bring it to gross national product at market price. How to calculate gross national product at market price from gross domestic product at market price? GDP at market price plus net factor income from abroad. Agree? GDP at market price plus net factor income from abroad. What I'll get? I will get gross national product at market price. I will get gross national product at market price. Hi, Anna. Yes or no? Yes. From gross domestic product at market price, I will bring it to gross national product at market price. Okay, sir. Now I got gross national product at market price. I have to bring it to net national product at market price. Gross to net. How to bring it? By deducting the depreciation. So net national product at market price is equal to gross national product at market price minus depreciation. What is gross national product at market price? This one. You have to repeat this. GDP at market price plus net factor income from abroad minus depreciation. How many of you agree with this? People agree with this? This is actually the easiest task which I have given you. The task is, see, if you understand the concept, no, I am telling you next attempt may, while you go on understanding the point, if you go on understanding these points, no, you go on getting the answers. Yes. So the logic wise, you have to go on understanding the logics. So if you understand this logic, no, the next attempt may definitely pass. So logic. Why? Because this is anyhow, what is this? This is not descriptive one. This is objective, multiple choice questions. More clarity with the logic. If you have more clarity in the logic, you have more clarity in the concept, answer is easy. You write the answer, you get the marks. Very good marks. You'll get very good marks. Very good. So this is how we calculated net national product at market price. Once again, see, so far people do one thing. You have to go on writing one formula sheet. You should have one formula sheet now. In that formula sheet, I'll do one thing. I'll write one formula sheet. I'll make one formula sheet. Formula sheet. So I'll make a formula sheet. In this formula sheet, number one, what we discussed, GDP at market price. How to calculate GDP at market price? Bachcho, how to write GDP at market price? GDP at market price, current year quantity multiplied by current year price. This is nominal GDP. Current year quantity multiplied by current year price. This is nominal GDP. Next one, second is real GDP. Real GDP at market price. How to calculate, sir? Not market price. I'm so sorry. Real GDP. So we will write just real GDP is equal to current year quantity multiplied by base year price. Current year quantity multiplied by base year price. Formula sheet में second important formula. Third important formula is GDP deflator. Formula for GDP deflator. How to calculate? Nominal GDP divided by real GDP into 100. So this is GDP deflator ka formula. Everyone, this is GDP deflator formula. Next one, fourth point, very, very important one. Sir, net domestic product at market price. How to calculate net domestic product at market price? Very easy, sir. Gross domestic product at market price minus depreciation. है ना? Gross domestic product at market price minus depreciation, that is net domestic product at market price. Point number 5, next formula. Gross national product at market price. Everyone, gross national product at market price. Sir, कैसे calculate करते हैं sir? Gross national product. Gross domestic product at market price plus net factor income from abroad. Plus net factor income from abroad. बच्चों, my dear students, every day you have to go on writing this formula. You know, you don't know. See this formula sheet, what I'm writing now, no? So you have to make one formula sheet, standard formula sheet, and close your eyes, go on writing. I'm so sorry. Don't close your eyes. Open your eyes and write. But keep this formula sheet, stick it to your wall. That's okay. You can stick it to the wall. Provided hostel, if you are staying in hostel, make sure it is allowed. If it is not allowed, then stick it to one notice board. It will help to everyone. Those who are writing CA Foundation, no, it will help to all of your friends. So that stick it there and go on writing. Write and later compare whether it is matching or not. So later you have to compare. Okay. So this formula sheet makes a difference. Please do make the formula sheet, and every day you have to go on revising. Revise. The key to success in CA course is revision. Revision is must. Next formula. Okay. Sir, not working, sir. Wait. This pencil, no? This pencil requires some. Wait. This pencil requires little charge. So I'm just disconnecting. I require some charge here. Don't worry. We will revise. We will revise, not to worry. We will revise here. Listen. First formula, that is GDP at market price. Okay. Current year quantity multiplied by current year price. So that is GDP at market price. Point number 2, real GDP, sir. How to calculate real GDP? GDP at how to calculate real GDP? The current year quantity multiplied by how to calculate current year quantity multiplied by base year price. That is real GDP. Second one. Third one, GDP deflator. Nominal GDP divided by real GDP into 100. That is GDP deflator. Fourth point, very important one. Net domestic product at market price. Net domestic product at market price, gross domestic product at market price minus depreciation. Later, gross national product at market price, gross domestic product at market price minus depreciation, sorry, plus net factor income from abroad. If you add, you will get gross national product at market price. You'll get gross national product at market price. Clear, clear, clear. Are we clear with this? Yes, sir. We will continue. हाँ, चलो देखते हैं कितना चार्ज हुआ है. Yes. Next one, point number 6. Gross national product at market price हुआ है ना? Gross national product at market price. Now we are going to discuss about gross domestic product at market price is equal to gross national product at market price minus net factor income from abroad. So here gross domestic product at market price is equal to gross national product at market price minus net factor income from abroad. Okay. Yes. Point number 7. Next one, 7th point here. That is 7th formula. Formula number 7. What is formula number 7? Sir, gross net national product. Net national product at market price is equal to gross national product at market price minus depreciation. Sir, we have written here, no? But that is for net domestic product at market price. That is for net domestic product at market price. I am calculating net national product at market price. Okay. How to do net national product at market price? That we have calculated gross national product at market price minus depreciation, or net national product at market price is equal to gross domestic product at market price plus net factor income from abroad. Can you tell me what is this formula? If you add net factor income from abroad, what you will get? Gross national product at market price. You will get gross national product at market price. Yes, sir. To this, if you deduct depreciation, क्या मिलेगा आपको? What do you get? If you deduct depreciation, you will get net national product at market price. Easy or not? Easy or na? Easy hai na? So this is easy one, sir. So this is about your some important formulas, but don't worry. Keep this formula sheet aside or with you. Every time you have to keep this formula sheet with you, and we are going to continue. We will write still there are somewhere 10-15 formulas. So we have to write somewhere 10-15 formulas. Definitely this is going to help you. Huh? Okay. Wait, I'll go to the old here. Next one. Uske baad sir. Net national product at market price. Very simple one. Gross national product at market price minus depreciation. We just discussed now. Or net national product at market price, net domestic product at market price plus net factor income from abroad. Okay. One more formula, sir. We got one more formula. Net domestic product at market price plus net factor income from abroad. Arey, same formula it is. What we are doing? Wait, sir. Here, formula sheet mein. Go to formula sheet. And what we are calculating? Net domestic product at market price. 8th formula. Net domestic product. No, not net domestic product. Net national product. No. Yes. What I'll do, I will rub this. Or net national product at market price is equal to net domestic product. Net domestic product at market price plus net factor income from abroad. Everyone. Kutaktiria, you are getting this? So here, what I have written, 3 formulas for one answer. See, you have to find out net national product at market price. There are 3 different ways of calculating this. So we have 3 different ways to calculate this. First one, Net national product at market price is equal to gross national product at market price minus depreciation. We got net national product at market price. Sir, what we have net domestic product at market price, net domestic product at market price plus NFIA, we will get net national product at market price. NFIA को add कर दो. See, how to bring gross to net by deducting depreciation. Sir, how to bring domestic to national by adding NFIA, net factor income from abroad. Sir, one more idea it is. See, crux, somewhere in the right side of the page, at the top, or somewhere you can make one different sheet. You can keep one sheet for this crux. You can keep one sheet for the crux. This is the very important sheet here. Very important point it is. Point number 1, which says that from domestic to national. From domestic to national. Sir, what has to be done, sir? If I want to bring from domestic to national, from domestic to national, what I have to do, sir? Simple. Add net factor income from abroad. What you have to do? You have to add net factor income from abroad. Point number 2, next crux, sir. From national to domestic. National to domestic. क्या करोगे? Less net factor income from abroad. है ना? Agree? You have to deduct less net factor income from abroad. Sir, point number 3. Point number 3, from gross to net. Gross to net. क्या करोगे? Less depreciation. Point number 4, from net to gross. What you have to do? In case you are converting from net to gross, what you have to do? You have to add depreciation. So you have to add depreciation. See, listen. So the last point which I am going to tell, and I am going to wind up here. So the point is crux. Crux mein, listen. Crux mein, we discussed about 4 points. Point number 1, from domestic to national. What you do? Add NFIA. From national to domestic, deduct NFIA. From gross to net, deduct depreciation. From net to gross, add depreciation. Again, everyone, listen. The 4 crux here, the 4 points here in the crux, you have to remember this. In next class, I'm going to ask this. And remember, believe me, this is the one which is going to help you a lot. Point number 1, from domestic to national, add NFIA. From national to domestic, deduct NFIA. From gross to net, deduct depreciation. From net to gross, add depreciation. So these are the 4 important points you have to remember. Okay? We will do one thing. For the time being, for this session, we are going to stop this session here. So I'm going to stop it here. We are going to discuss about some extra points in next class. We are going to finish this unit. After finishing this unit, we are going to the Keynesian theory of national income. We are going to discuss about the Keynesian theory of national income after this unit, and we are going to start this in tomorrow's class. Yes, everyone, thank you so much for your patient listening. If you have some doubts, you can ask. This is your time to ask the doubts. If you have some doubts, you can ask it now. कुछ है? No? Okay. Abhilash, thank you, sir. Deepak, thank you, sir. Snehal, thank you. Everyone, thank you so much. Chalo. Everyone, thank you so much. We'll meet in tomorrow's class. If you have some doubts, you just keep it, note it down. And next class, first I'll ask you the question.